Welcome to a new update, and in this update we're going to talk about the fact that Bitcoin made a new yearly high. We're also going to look at a new news event which took place, and we're going to dive into the price action of Bitcoin in which we can establish a few important levels. And in this update we're going to focus on where we are in the cycle, as we can line up some interesting facts with 2015 and 2016 going into the Bitcoin halving of next year. But before we continue, make sure to hit the like button, subscribe to this YouTube channel. Also make sure to check out my Discord where you can find more content that is being built for you. And also this week we're going to update the altcoin portfolio. I've been very silent on it as I've been doing a lot of things, including launching a course, moving the office space and more. So we can focus on the strategy again from now onwards. As we talk about the course, it's the final 2 days to get your hands on a Crypto 101 course of more than 7 hours of content, which includes everything you need to know about the ecosystem, as you can see here on the screen. Bitcoin and money, Ethereum, the ecosystem, security, building your portfolio, introduction in TA and FA, and it includes a 15% discount, final 2 days to get it. After that we lower the discount, or actually remove the discount, so make sure to get it in the final 2 days. Now let's talk about the news event that we had, which is the fact that not only the US is doing really well in terms of launching ETFs. Around 25 trillion in assets under management have proposed a potential Bitcoin ETF. The market cap of Bitcoin is currently around 600 billion. So if you already, if there is just a slight percentage of that going to be used in the ETF, not only by just buying people, but BlackRock accumulating the position to actually have collateral for the ETF, you know where Bitcoin is going to go to. And given the fact that it's just a 600 billion asset, silver is larger, gold is 15 times larger, even more than that, which means that we are at the edge of the actual cycle start, which we call the super cycle, or which I would compare to the dot-com bubble cycle, through which it is very likely that from here onwards towards the peak of 2025, we most likely are going to have a cycle that is comparable to 2015 to 2017, which also had a phase where a big group of people were jumping into the markets, and this time it's the next flow, which is institutional investors, more retail coming in, more governments jumping in. It's very likely that we're going to have that in this cycle, so we just gradually go up in terms of adoption, in terms of price growth, through which an expectation of Bitcoin to do a 10x or maybe a 15x is not strange to expect in this cycle, especially since the market cap of crypto is around 1.2 trillion. The dot-com bubble was approximately 10 to 15 trillion, which also collapsed afterwards, as price and hype always starts to accelerate, which inevitably will happen to crypto too. But this cycle, if you use the inflation that has been there since 2000, dot-com bubble would have been 30 to 40 trillion nowadays. I'm not assuming that Bitcoin will do the exact same, but you can assume that this cycle will bring crypto to between 10 to 20 trillion and peak from there, and then have the slow gradual adoption taking place and slower cycles afterwards. So this is the cycle. And the news of the Hong Kong's biggest bank, HSBC, offering a Bitcoin ETF to customers is another signal that institutional investors are jumping into the markets. The regulatory framework is being built, more big parties are jumping into the market, which means that there is some serious interest, which means that the markets are heating up for the bull cycle. So should you. So when we talk about the price action of Bitcoin, we can clearly say that we've been taking the yearly high here, right? So if we mark the yearly high, we can see that we've been taking it by a slight chance here. We've been wicking there, and there is another important level that we need to eye, and that is the 31k level, or 32k level, sorry. So these two are the important ones. If we break those highs, that is going to bring us towards the next level. So we are into the final stages. And what we can see is another important factor here, which is the fact that we have been holding above these 200 EMAs. Why is this important? Well, if you start using the previous cycles, and in this case I'm using the 2015-2016 cycle. In this case we have been acting above it for the entire period. In 2018 we have been moving beneath one of them for a slight period, and in 2020 we had the cascade. Okay, we have an outlier here, so I think ultimately that if we would have been having a crash for the COVID-19 and BitMEX didn't fill, we would have been sweeping this low, and then we just continued gradually from the 200-week MA towards further continuation to the upside. So now we have been acting beneath it for a long period, which means the price of Bitcoin has been undervalued for a substantial period as well, since Luna crashed, since FTX took place, etc., etc. So in that case, what we're looking at here is the fact that we are breaking back above the 200-week MA, back above the 200 EMA, which means that you can get into a plan of buying the dip again. Now we have also been establishing a significant break to the upside, which means that usually you don't really get many 200-week EMAs and MA tests during a bull cycle. The indicator though shows that we are into one, and I'll just get to it in a little bit, but what we can see on the cycles is that in 2019, in June 2020 we had or May 2020 we had the halving taking place. Usually you get a run up, and in May we've had the peak high, but this period has been consolidation and we've had a few runs. If you look at the 2015-2016 cycle, we had the halving taking place in July 2016, and we had the start of the run taking place from September 2015. So approximately 10 months prior, we started to make a significant run, which you can use in Fibonacci extension to derive where the run goes to, which is the 618 level. After that, we've had a second run, which was to the 2.382 level, as we can see here. And I'm going to use the 2015-2017 cycle, as now there is a new group of investors jumping into the markets, just like we had seen in this cycle. 2021 didn't really derive many new participants actually. It was the same old group, and then some crypto VCs, but not really institutional interest. So I think this is not our cycle that we should be comparing it to. We should be comparing it towards the 2015-2018 cycle. Additionally, what we can see here is that in the current cycle, we have been seeing the case beneath the 200 MA, right? So if we are going to use the Fibonacci extension tool, we can definitely say that we're going to look at a case of 35 to 34K. But we need to include the fact that we have been moving beneath the 200-week MA and EMA, which didn't happen in this previous cycle, but did happen here because of the lower valuations of the markets. So the next target is breaking these highs and getting it towards 50K in the next round pre-halving. That is still a very likely case. That is also still a very likely case that altcoins can continue pushing. But for this run, given that we are at this point, it's still up for debate whether we're going to have a correction taking place. But I'm marking 42K as the potential end of the run for this current rally of Bitcoin. I'm also not assuming that we're going to get many tests anymore at the 200-week MA and EMA. Also, what we can see here is that we have been getting this deviation beneath the low. Higher low was established on the lower time frames here already. Breakthrough, through which we have been taking these highs, and we started to make a higher low, a higher high, another higher high, another higher low. So if we want to derive Fibonacci extension from this push here, we can use it through this way, which marks 35K and 41K as well. And if we do it from the entire period here, we can start marking 40K to 42K, and we can start marking higher levels here. But this is the crucial pivot that we most likely are going to run to in this current period in the coming few months, after which we are going to have a case of a correction, and then pre-halving we have another run towards 55K, and then correct, and then slowly but gradually we are going to get into the phase that we are having this big expansion taking place, peaking, like I guess probably December 2025 we're going to peak, and then the peak is going to be established around 300 to 400K for Bitcoin, maybe a little bit higher. as then we can start finding ourselves into support at 65k. So that's my current thesis of Bitcoin. I'm looking at that on the higher time frames. When we're looking at the lower time frames, we can definitely argue whether or not we're going to have a case of another wick taking place, and how can you derive potential points of interest. Well, if you're a day trader or scalper, which I'm doing with my portfolio in the group too, which is up 10% around right now, is that you're looking at cases of liquidity grabs, right? So when you're looking at the lower time frames, we can see that we have been taking the wick at 31k. We have been taking the liquidity here, high volume candles, and then we reject. So the first optimal scenario is that you take the breakout of 31k and start longing there, as another test is most likely going to bring it to the upside. The second case you could go for is a case where you take the entry of 30.5k, which is a pivot here, as it's the previous high becoming support and staying support, but now still being a resistance until proven otherwise. So in that regard, if we break 30.5k, that is going to be a trigger as well for continuation on the longs, and that is where you can start activating a potential trade. The second scenario is that we're going to make a wick towards 29.5k, take the liquidity, maybe even dip into this area, and then the reclaim is going to be your trigger, or the aggressive one if you want to take the wick, like you can see it over here. That is the second approach. Ultimately, I think that if we are trending upwards, we are not going to have a massive correction. Usually we get a Monday correction taking place, which we have seen already, and then during the week we start grinding upwards. So I think that is most likely what we see here too, especially if you look at the previous cycle. We ran up Sunday and Monday, we were correcting, and then from Tuesday onwards, actually later on Monday, we started to break towards the high on Friday. Then the weekend was correction again, and then the cycle continues. So I think the bull is here, and you're going to see more content from my side. On Thursday we discuss macroeconomics or my portfolio that you must hold. Ciao.